The reason why so many people end up getting wrecked instead of getting rich in the stock market is because they don't understand this one thing. Everyone thinks that stock market crashes happen when everyone is afraid, but historically, that's not the case. Usually, markets are most vulnerable when investors think that nothing bad can happen. That's when you'll start to see this phenomenon that economists call irrational exuberance, and that's what we're talking about today. So sit down, class is in session. I'm Nicole Victoria. I built an 8-figure net worth by understanding how money works, and now I teach you guys so you can actually get rich too. Now, the term irrational exuberance was popularized by economist Robert Shiller, and it describes this moment that fuels the bubble that causes the crash, and it's when investor optimism gets so strong that prices start rising faster than what reality can support. In simple terms, people become so confident about the future that they completely ignore risk and think that nothing could ever go wrong. We have seen this pattern repeat throughout history. Take the dot-com bubble in the late 1990s. Investors were so excited about the internet, and they weren't wrong, okay? The internet went on to change the world. But at that time, you were hearing things like, profits don't matter anymore. This is a new economy. And companies with almost no revenue were trading at extremely high prices on the stock market. Eventually, the companies couldn't deliver the profits that were already priced in. Remember, the market is future looking. They're thinking, okay, what could this company potentially make in profit in the future? That's how we'll price them today. Because they were irrational, the market corrected hard. We saw a similar thing leading up to the housing crisis in 2008. At that time, everyone was saying real estate never goes down. Just buy now or you'll be priced out forever. You can always refinance later. Confidence was extremely high, but again, risk was being ignored, and that's what irrational exuberance looks like. That creates bubbles. And what do bubbles do? They pop. And again, irrational exuberance doesn't mean the underlying idea is fake. The internet went on to change the world. Real estate is still one of the largest world's asset classes. The problem is when optimism pushes prices far beyond what reality can return in the short term. So what do you look for to see if we are in a period of irrational exuberance? Prices rising faster than the actual performance of those companies, like what they are actually making. Are they actually making money right now, and how much? Second, risk gets ignored. Bad news stops moving the market the way that it normally would. And third, confidence becomes extreme. You start hearing phrases like, this time is different. This asset can only go up. Where have you heard that before? Those are warning signs, and no, this doesn't guarantee a crash tomorrow. Markets can actually stay irrationally exuberant for a lot longer than investors expect. But historically, markets become most vulnerable not when people are afraid, but when they become confident that nothing can go wrong. And this is why I don't just teach my students what stocks to buy, I also teach them market cycles and market psychology so they know what to look out for so that they can position themselves to actually make money and not get wrecked. If you want to learn more, I have a bunch of free trainings for you guys, link in bio.